Hello, everyone. Happy Wednesday. This is Simon with AvaTrade. Welcome to our weekly webinar, Interactive Trading Conversations. As I see that more people are joining, and before we start, as usual, I would like to ask you for a favor, just to confirm that you could hear me by typing OK into the questions window. Type OK. Great. Thank you very much. And also, so we'll confirm that you could hear me. And if you could see this funny guy with the glasses and AvaTrade logo with the title of the webinar, just type S-E-E. So we can know that everything is good technically and we're good to go. Testing, testing. Guys, if you could hear me, just type OK into the questions window. Thank you. Guys, okay. Beautiful. So we got that out of the way. Thank you for your assistance. Again, welcome everyone. Welcome to our weekly webinar, Interactive Trading Conversations, as we do it every Wednesday at the same time. My name is Simon. I'm a senior account manager with AvaTrade. I'll just share with you a few things about myself so we'll get to know each other a little bit. I'm a senior account manager, as I said. I started my trading career in New York City as a prop trader and got my license in June of 2000. And I did it for about 11 years straight, pretty stressful. So after that, I moved on into a different way of trading. And what I do now, it's amazing. I have a great opportunity to assist our customers with their trading needs at AvaTrade. The agenda of the webinar, I see a lot of regular people, so you know the drill. And this is for new people. I'll explain what we do here. We ask questions the same way you use that questions window for confirming that you could hear and see me. You're going to type the questions there, and this is the whole idea. You came here for the reason you read the description of the webinar. We'll come here to ask specific questions on the specific assets. And we'll go through it. We'll look at it from the technical perspective. If I know any fundamental important things about it, I'll be happy to share with you. I follow a lot of markets. I'm on top of a lot of things. Of course, not everything. I don't think anybody can know everything. And that's the format. We have up to an hour. So I hope that we have a lot of questions. We have a nice crowd today. Hopefully, we'll be having a lot of questions, interesting questions. Now, risk warning, everything we do here, it's purely educational. You can find the full document at avatrade.com. As I'm speaking to you now, actually, I'm catching a mosquito. And I know it's a stupid thing to say, but I analyzed the mosquito for the past half an hour, and I think it's a big lesson for me. Hopefully, it will kind of stick to all of us. You know, when you watch that trade, and you don't have patience, you just go in, you go out, you go in, you go out. And I was just watching this mosquito. It just comes out. I don't manage to catch him. He hides again under the table, and sometimes I could be waiting for him 5 minutes to get out, and he still is not getting out, and he's waiting for that moment when I'm not paying attention. He comes and just bites me or tries to. So I try to analyze or compare it with my trading, and we all know if we have a plan and we have a specific scenario that we're looking for, and if we have patience to look for it and wait for it, and it comes, it's still no guarantee, but definitely makes us feel better about our trading. So I just thought this mosquito thing, it's an interesting example. All right, back to our topic. Here we go. Social media channels of AvaTrade. Please feel free to subscribe. You have Telegram, you have X, and you have YouTube, which is my favorite. Please make sure you subscribe. Click on that bell. You'll be notified for new things. And also important to mention, a lot of people will be watching this webinar on YouTube as it's being recorded, and it will be posted probably later today or tomorrow. So people that are watching on YouTube, they have no access of asking the question. So you and I will have a very important job to try to get as many questions as possible, so people that will be watching it on YouTube will get a lot of useful information. Just keep that in mind. Okay, now as you know, I start from questions that are being sent. So there are a few questions that I'll be starting with, and if you feel to type the question, if you feel typing questions, you can just send it into the questions window. And when we go through these questions, actually it gives a little bit of space for you and prepare you for the real questions. So let's start with these things. These are actually good questions, so probably will help all of us to learn a little bit about these things. So the first question: what factors should trader consider when investing in commodities like gold and oil? Now, guys, if you have something to write, if you'd like to comment on it or write your opinion, please. This is the whole idea of our conversation here. It's a round table, and that's what we're trying to do. So if you have any opinion, please write. I'm going to share it with everyone, and let's make it teamwork. Okay. So let's start with gold. Investing in gold. It depends. If you're an investor or trader, you have to know, first of all, your time frame. Are you a day trader? Are you a high frequency trader? You're a scalper in and out? Are you a swing trader? And based on that, you already go further and make your decisions. But what to consider in gold, as you know, and I've been saying about gold a lot of times in these webinars here. Gold has a few titles. Its major title, it's a safe haven. As you know, any issues happening in the world, including the geopolitical, the wars, market collapse, uncertainty, government falling, other things, pandemic, as we had, right? Wars, other things. You could see that the gold is moving higher as people, when they feel uncertain and panic, they tend to invest into gold. And I think it goes back centuries, right? We know at some point there was no paper money. There were gold and silver coins, right? So people were traveling. If you could go from Europe to Asia or Africa or anywhere else, and you carried the golden or silver coins with you, and this way you can buy yourself I don't know, food, horses, a house, whatever it is. So I think it still plays the same role. You keep the thing is, us traders, we don't really touch physical gold. We trade not even the futures. We trade CFDs of the futures. So it's electronic gold. Now also, it's inflational instrument. So when it goes sometimes against the US dollar, sometimes physical gold is being bought by central banks. As we know lately, there were a lot of things in the news, like China has been buying a lot of physical gold. At some point, Russia was buying a lot of physical gold. Now, with the inflation in the past probably year or two, most of the central banks increased their holdings in the physical gold as well. So these are the things to take into consideration. Sometimes it makes sense, and I'll give you a live example just now, what's been happening since the CPI numbers today, right? So sometimes you could see the market selling and the gold is going higher. Sometimes you see the dollar selling and the gold is going higher. Or the other way around, when the market is running, the gold is selling. If the dollar is running, the gold is selling. So sometimes you could see it plays as an inflationary instrument. Sometimes it feels that it plays like safe haven, but sometimes it just doesn't make sense. So you have to be prepared to that as well. So let's take a quick look. Let's take a 30-minute chart, and let's take US dollar here, right? At 1:30 GMT, we had CPI numbers. It was a spike up and down, and then dollar continued higher, right? And then take a look. So you would think, okay, if it's against the dollar, that the gold should be going lower, right? So let's take a quick look what gold did around that time. At 130, the gold started to run, didn't even pull back. And it is, I think it's close to all-time highs now. We are fighting this resistance 27.19, okay? Beautiful move. So as you could see, both dollar and gold went higher. Also, if you take a look what happened to, let's take S&Ps as a our general index, it's just skyrocketing. So how do you make sense out of it? And that's, we should be prepared. Sometimes there's no logical explanation. At least I can't find one. You have the market going higher, so that's risk on, and classical scenario, the gold should be going lower, and it didn't. Also, dollar went up. So all three assets, it's been happening sometimes. This is a very weird thing that I don't know how to explain it. So even though you can find the logic, like I shared with you, the markets are selling or geopolitical things are happening, but sometimes it just doesn't make sense. So again, this is S&P 500 running. Take a look. We are approaching the all-time highs, and you have gold running as well. We are testing this resistance here from November 24th, 25th. Okay, that's on gold. Now, the second part of the question was oil, right? So let's take a quick look at oil. By the way, it's moving higher today. With oil, a lot of things. First of all, let's just forget about what we're trading, oil, gold, apples, or potatoes. There are two aspects, and I like to explain it in a very simple way. There's aspect of supply and there's aspect of demand. So if you come to the market where they sell fruits and vegetables, and you have 10 guys selling apples, and there's only few people that they are interested in buying apples. So what's going to be happening to the price of apples? They're probably going to stay low and might even go lower, because as demand is low and people need to sell them, so they're going to either bring the price down to be able to sell it, or they might just pack and go home and wait for another day. Now imagine the opposite scenario. You have a huge line of shoppers looking for those apples, and there's like one or two guys. I mean, ideal scenario, one guy selling, he can sell it for whatever price he wants. Of course, you can. I mean, we saw a banana on the wall sold for $6.2 million because it was demand for it. And what I'm trying to say, it is always demand supply. So if you take oil, going to oil, you have a supply side, right? As you know, 10, 20, 30 years ago, if there was a war in the Middle East, the oil was just shut up to the skies. This time is not happening because it's global. US is producing a lot, Canada is producing, UK producing oil, Norway producing oil. So it was initial reaction, but then with the war happening in the Middle East, we saw oil is really sliding lower. As this is the daily chart, so you can just draw a simple trend line just to give you the direction. We keep on going lower, right? So that's on the supply. So it looks like supply is high, okay, on one side. Also demand, it's the second side of the equation. If you take China, I've been talking about it a lot. Before this jump, China has been really struggling. The economy has been shrinking since pandemic, corona, whatever you want to call it. And then it really affected the demand on oil. As the economy is slow, there's less cars driving, there's less business going on, less factory productions and so on. So demand for oil shrinks. So here we go. We had the supply high, demand low, oil continued going lower. And this is something to take into consideration when you trade any instrument. There's supply, there's demand, and in some instruments it's clear, right? Like oil, by the way, today OPEC said that demand is going to continue slowing. They had the OPEC meeting, and the outcome was that they're predicting a slowing down or continuous slowing down in demand. Not such a good thing for oil. And again, speaking of logic, as they said it, oil is shooting up, testing this trend line, downtrend trend line, right? So that's as far as oil and gold. Now let's move to a second question. Somebody asked about the withdrawal. Guys, it's not the place to ask the withdrawals. About the withdrawals, you can ask customer service or your account manager about these questions. Let's stick to the markets, okay? Second question. What are the key indicators to watch when trading major indices like S&P 500 or DAX? Also, very good question. Now, I hope the person meant not the technical indicators, but the reasons and so on. So, indices. What's index? The S&P 500 is a collection of 500 companies within it, and as the share price of the company fluctuates, so does the index. Also, you have futures for the index. What you trade with us, you actually trade CFDs for the future contracts, right? S&P 500 as an index, it's a cash index, it's a spot index, also trades during the day when the shares are trading. So this is US market, so it trades from 9:30 a.m. until 4 p.m. Futures are trading around the clock with a little break at night. Okay, so what you have to watch the companies, and as you know, if you watch the major companies that has a lot of weight on the index, as those companies moving up will pull the index up. As they go down, it pushes the index down. So that's as far as the companies. Also, if you trade US indices, including the S&P 500, it's important to know what the general economic situation is, what's the inflation doing, what are the Feds doing. As we know, exactly a week from now, plus a few minutes, we're going to have Fed's decision on the interest rate. So it's been for a while that as the interest rate has been cut so far, give a boost to the markets. Why? Because it's cheaper to borrow the money to expand your businesses, and also cheaper to repay the loans that you already took in the past. So it affects in a positive way the bottom line of the companies, right? You have expenses, you have income, and then at the end you have net income. So if your expenses are less, your net income is higher, and it looks good for the shareholders to hold your shares as a company. Okay, so that's on S&P 500. Also, GDP numbers, all kind of economic numbers are affecting it, and employment numbers, of course, as we had last Friday with NFP numbers. So, economic numbers, you have interest rate, you have specific companies, and the general market direction. So that's the U.S. DAX is similar. By the way, it was DAX 30. Now it's been, I think, for a couple of years, DAX 40. There are 40 companies in German DAX. And also, it's important to know who are the leaders, what companies are the leaders in the index, and watch those. And as you know, as they're going higher, it will pull the market or push the market higher, and vice versa. And of course, similar, what euro is doing, what's the interest rate in the ECB, European Central Bank, what in general, what politically is happening. As we know, step back a little bit, if you look at the French index, there were a lot of issues politically, there still is. So the index suffered a lot and now recovered a little bit. So all those things are important to watch. Also, some traders, when they trade DAX, they keep an eye on the U.S. index, and some actually compare DAX with Dow Jones, and they find similarity in trading. Sometimes they go in the same direction and same reaction. So they trade DAX, they look at Dow Jones. It's a index that has 30 major stocks within it. So those are pretty much the ideas on S&Ps and DAX. The third question, guys, you can write questions as we speak, so we wouldn't be waiting for those. So when I finish with this third question, we can continue with your personal questions, and that would be great. Okay. So what are unique risks and opportunities in cryptocurrency trading today? Great question. And I think they're equal risks and opportunities as in everything else. And as you know, November 5th, there were elections in the US, and starting November 6th, not only equity markets ran up, the cryptocurrencies had a nice move. And as you know, the few days back, we hit 100,000 on Bitcoin as the leading cryptocurrency coin, right? And take a look. The moment we hit 100, we went. This was the day of up and down on the 5th of December, exactly a month after the elections. We had to move up to almost 104, and then move down to. There was a big range, 91, 92,000, and now we are above 100K again. So very, very important. When you trade cryptocurrency or any market, especially cryptocurrency, there's always a temptation to get in and make a lot of money. There's always a fear of losing a lot of money. So in any instruments that you trade, including cryptocurrency, you need to make sure that your risk is proportional to the balance, the money, the amount of money you have on the account. And everything you trade, you have to know. You have to set up for yourself criteria. You want to risk a certain percentage out of your account per trade. Some traders like to put their risk for a day, a risk for a month, other criteria. It's all individual, whatever you choose to do, as long as you're in control and you know what you're doing and you have a plan. Right now, in general, if you take cryptocurrencies, they had a nice run since elections. Again, very simple. Trump is really in a positive mood for cryptos, and the rumors are, I guess, going to be a fact soon. The SEC, head of SEC, is going to step down and will be replaced with someone else. And that's pretty good, because what they tried to do, they tried to put a lot of issues and blockages and regulations and all kind of things to slow cryptocurrencies from developing. Just to give you another one, the Ripple, right? They still have some legal issues. The SEC is trying to sue them. I don't know the details, but take a look. Since November, right here, it started November 5th and 6th, right after elections. It came from 53 cents to almost $3. That's a huge thing, right? And now, of course, there's a correction. There's profit taking. We might come in again, retest 150, $1. We might just fly and retest the all-time highs. I think it was 340 somewhere here in 2018. Yeah, 322 it says. So that's the cryptocurrencies. If you are involved with cryptocurrencies, you have to be in control. You have to know what you're doing. You have to know your risk. You have to look for trades with opportunities and see if your risk is proportional to the funds that you have in the account, and if it's also proportional to a potential profit that you're trying to make, right? Okay, so we're finished with these questions, which is great. We're about 25 minutes into the webinar. And I think I'm ready for your questions, guys. Again, just to remind us, we have up to an hour. And all you have to do is just think of the asset that you like to learn about, and then write your question or type your question into the questions window. Okay, I'm going to give you a minute to collect some questions. Let's go, guys. Let's keep this going, and let's use this time proactively. All right, guys. I don't see any questions, which is a little bit weird. And I really don't know. I explained what we do here. You came here with a desire to get information, and for that, you need to ask questions. So I use the questions that were sent. We answered those, and I'm going to give it another few seconds. They're a nice crowd here, and I'm sure you can come out with some great questions. It's very simple. You just have to think. Let's say somebody here asked about gold and oil. It's like you ask the question about oil, about gold, about euro dollar, about specific shares, about a specific commodity, and so on. So let's give it another 10 seconds, okay? Let's go, guys. All you have to do, just type the question. I'll read it, and we'll go through it. Thanks. All right. I guess no questions. Really, it's a mystery to me anyway. But thank you for participating. I hope you'll be more active next time. I want to wish everyone a good evening, and we'll be back next week. Take care. All the best.